Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Good morning and welcome to Connecting the Dots. I'm Alex.
And I'm Morgan. Great to be here as always.
Today is Tuesday, October 7th, 2025, and we're diving into three stories from the Morning Star that are, well, really shaking things up in tech and finance.
Yeah, it really feels like one of those days where you can see the groundwork shifting. We're talking major moves in AI development, a truly massive chip deal, and even Bitcoin getting into long-term savings, foundational stuff.
Absolutely. But first, let's get a sense of the day.
Yeah.
Here in Sacramento, it looks gorgeous sunny, high of 87 expected.
Nice. For folks elsewhere, though, maybe keep the umbrella handy. There's some heavy rain, potential flash flooding across the Ohio Valley, Central Appalachians.
And watch out for severe storms popping up over the Southern Rockies and High Plains later.
Right. Okay, turning to the markets. How did things look at the close yesterday?
So the Dow took a small dip, down about 0.17%, closing just shy of 46,700. Still up for the week, though, about 0.84%.
Okay, pretty stable. And the S&P?
S&P 500 actually edged up a tiny bit, 0.10%, and closed at 6,740. Weekly gain is a bit better there, over 1%.
Standard stuff, mostly, but Bitcoin.
Yeah, Bitcoin. Daily movement was pretty flat Monday, just up 0.08%, closing around 124,829.
But the weekly trend?
Wow, exactly.
Since last Tuesday, September 30th, it's jumped almost 9.5%. That's quite a climb.
That kind of volatility, but upward this time, really underscores why people are scrambling to figure out how this fits into, more traditional financial planning, which actually tees up our third story quite nicely. It really does. But hang on. Before we get into the big tech news, let's thank our sponsor, Pins and Aces.
Ah, yes, Pins and Aces. Great stuff.
They're the premium golf apparel and accessory store. If you need top-notch gear that looks sharp and performs well on the course, definitely check them out.
And they've got a great deal for our listeners. Use the promo code SNARFUL, that's SNARFUL, at checkout.
And you'll get 21% off your entire purchase. Pretty sweet deal.
Fantastic. Find them online at pinsandaces.com. Remember, that's pinsandicequest.com.
All right, let's tackle these Morningstar headlines. First up, OpenAI's Dev Day. They dropped something called AgentKit, and everyone's saying it's like Canva, but for building AI agents.
That Canva comparison is it's pretty spot on, actually. It instantly tells you the goal here is accessibility, right? Making it easy.
Yeah.
Sam Altman basically announced it as this toolkit designed to slash the friction, make it way faster to build and deploy these multi-step AI agents, taking it from, a complex coding project to something more visual.
So less prototype, more production.
Exactly. They want regular developers, maybe even sharp business analysts, not just AI PhDs, to be able to build these things.
And the core is this Agent Builder tool. The visual part.
That's the heart of it. Think flowcharts, connecting boxes. You visually map out the logic, the steps for the agent's task.
Yeah.
It's a big shift away from just pure code.
Okay, that makes sense, but it's more than just the builder, right?
Oh yeah, it's a whole suite. There's ChatKit, that's an embeddable chat interface. So imagine a company wants AI chat in their own app.
Right.
They can drop ChatKit in, keep their own branding, their own look and feel, while ChatKit handles all the tricky back-end stuff for the chat experience.
Okay. And what about making sure these agents actually work reliably? That seems like a big hurdle for businesses.
That's where Evals for Agents comes in. This is crucial for optimization. You need ways to measure if the agent is doing its job correctly, especially with multiple steps.
So quality control baked in.
Pretty much. It gives you tools like step-by-step tracing to see where things went wrong, and even automated prompt tuning to help the agent get better over time. Like the AI helps debug itself.
Okay, that's pretty sophisticated.
And then there's the connector registry. This lets you securely hook up these agents to your internal databases or third-party apps like Dropbox, Google Drive, SharePoint.
So they can actually do things with existing systems.
Exactly. And there's an admin control panel for governance, security, all that enterprise stuff.
And the speed claims are kind of nuts. They built a whole workflow, and 2 agents live on stage.
In under 8 minutes, yeah. And they highlighted early adopters like Ramp.
Right. Ramp said something that took them months before.
Now it takes just a couple of hours using Agent Builder. That's a massive speed up. LY Corporation reported similar gains.
Wow. And this is all launching while ChatGPT usage is still soaring, right? Something like 800 million weekly active users.
Yeah, they have this enormous existing user base to potentially leverage or upsell. Making agents easier to build just pours fuel on that fire. It means companies are suddenly going to need a lot more compute power.
Which couldn't be a better segue to story number 2.
Yeah.
If AgentKit unlocks the demand.
Then this next story is about the staggering supply needed to meet it. This AMD and OpenAI deal. It's huge.
Huge doesn't even quite cover it, does it? A multi-year chip supply agreement. Potentially tens of billions in revenue for AMD.
Tens of billions. And the scale. AMD is supplying OpenAI with 6 gigawatts of compute capacity. 6 gigawatts.
Okay, put that in perspective. 6 gigawatts.
Yeah, what? Think about the Hoover Dam. This deal is for compute power equivalent to roughly 3 Hoover Dams. It could power maybe 4.5 million homes. It's an immense amount of power dedicated just to AI.
Wow. And OpenAI needs this because...
Because of that vision, Sam Altman has talked about needing something like 250 gigawatts of compute by 2033. This 6GW deal is a major down payment on that future.
And the first delivery is relatively soon.
Second half of 2026, that's when they'll get the first gigawatt featuring AMD's next-gen Instinct MI450 GPUs.
And AMD's making some bold claims about those chips, right? Saying they'll beat NVIDIA's comparable ones.
They are. They're directly targeting NVIDIA's upcoming Rubin CPX. Yeah. This isn't just AMD fulfilling an order. It's them stepping up saying, we can compete at the highest level. It's a massive vote of confidence from OpenAI in AMD's tech.
But the deal structure. This is where it gets really interesting, isn't it? The stock warrant.
Exactly. This is the connecting the dots part financially. OpenAI isn't just a customer here. They got a warrant, basically, the option to buy up to 160 million shares of AMD stock.
Which could be like a 10% stake in AMD.
Potentially, yeah. And the purchase price is just 1 cent per share.
A penny. For potentially 10% of AMD. How does that work?
Well, it's not free money. The warrant vests, meaning OpenAI earns the right to buy those shares based on hitting certain volume milestones for chip purchases. And it's also tied to AMD's stock price hitting targets, escalating all the way up to $600 per share.
Okay, so it's deeply tied to AMD's success and OpenAI buying a lot of chips.
Precisely. The market loved it, obviously. AMD shares jumped over 34% on Monday, added, $80 billion to their market cap almost overnight?
So what here is, it's validation for AMD. Big time. Puts them squarely against NVIDIA.
Absolutely. But more than that, think about the relationship. OpenAI is NVIDIA's customer. With AMD, thanks to this warrant, they could become a major shareholder with potential influence.
Influence over AMD's strategy, maybe?
Potentially. It changes the dynamic completely. It suggests a new model, maybe, for how these massive AI labs secure the absolutely critical compute they need by becoming strategic partners, not just clients.
Given the voracious appetite for compute, as you said, it makes sense. They're locking in supply and potential upside.
Right, and this is just one deal. Remember, NVIDIA's supplying 10 GW2. There are deals with Broadcom, Samsung, SK Hynix. It's an arms race for compute power.
Fascinating stuff.
Yeah.
It really does feel like the infrastructure of the future is being built, like, right now.
And funded in new ways.
Okay, let's shift gears completely. From massive corporate infrastructure to personal finance and long-term savings. Our third story is about Bitcoin making inroads into life insurance. Regulated life insurance.
Yeah, this one definitely turned some heads. We're talking about a company called Meanwhile. They're billed as the world's first regulated Bitcoin-denominated life insurance company.
Regulated where?
By the Bermuda Monetary Authority. And they just raised another $82 million in capital. That brings their total funding just this year to $122 million.
Well, decent chunk of change.
Yeah.
But who's investing? That seems key here.
It is key because it's a mix. You've got crypto-native VCs, the ones you'd expect, like Bain Capital Crypto, Han Ventures, but co-leading the round and participating, you have major traditional finance players. Apollo, a huge asset manager. Northwestern Mutual Future Ventures, the VC arm of a giant insurance company.
Wait, Apollo and Northwestern Mutual are backing Bitcoin life insurance.
That's the headline signal here. It suggests serious players in traditional finance, TradFi, as they say, are getting comfortable with Bitcoin not just as a speculative asset, but as like a foundational layer for real financial products. It's a big validation step.
Okay, so how does it actually work? If I buy a policy from Meanwhile,
everything is in Bitcoin. Your premiums are paid in BTC, the policy's cash value grows in BTC, and any eventual payout, the claim is made in BTC.
Huh. So the whole product lives on the Bitcoin standard, essentially.
Exactly. They offer life insurance, annuities, savings products, all BTC denominated.
What's the pitch? Why do this in Bitcoin instead of dollars?
The core value proposition is protection against inflation and traditional currency risk. By linking the policy to a scarce asset like Bitcoin, the idea is it holds its value better over the long term, unlike fiat currencies that tend to inflate away.
Okay, but Bitcoin's volatile, right? How does an insurance company handle that risk over decades? Life insurance, a long-term game.
Great question. That's the operational side. Meanwhile, doesn't just HO deal the Bitcoin, they generate yield. They lend out the BTC conservatively to large regulated financial institutions.
So they're earning interest on the Bitcoin holdings.
Correct. This makes them one of the world's biggest long-duration BTC lenders. That yield helps them manage the business, cover potential claims, and smooth out some of that volatility risk. It turns Bitcoin from just digital gold into something that can generate income, kind of like a bond.
Okay, that makes more sense.
Right.
They're using institutional lending to make it work.
Right. And it's significant because the insurance sector is massive, like 3% of global GDP. Seeing Bitcoin embedded here in a regulated way backed by TradFi money, it's a big step towards integrating BTC into the core global capital markets, moving way beyond just trading it.
And is there demand? Are people actually buying this?
Apparently so. Meanwhile, reported over 200% growth in their Bitcoin assets under management already. It suggests people are looking for these kinds of potentially inflation-resistant, long-term savings vehicles.
Interesting. Bitcoin as a building block for long-term wealth preservation, not just speculation.
Backed by the big guys now, too. That's the shift.
All right, powerful stuff across the board today. Before we recap, let's quickly thank our second sponsor, Skony.
Skony. Premium golf shoes.
Yep. If you want shoes that feel great, perform incredibly well, and frankly just look amazing out on links, you really need to check out Skony.
And just like pins and aces, there's a deal for you. Use that same promo code SNARFL, SNARFAU UPSTACIAL at checkout.
And you'll snag 15% off your entire purchase at Skony. Find them at skony.com. That's Sony.com.
Great shoes, great deal.
Okay, so let's quickly wrap the big takeaways from the morning started today. First,
OpenAI's AgentKit. Basically, they just made building sophisticated AI agents way faster and easier. Think Canva for AI, which is going to push AI deeper into businesses everywhere.
Second, that monster AMD OpenAI chip deal. It's not just about the billions or the gigawatts, it's validation for AMD against NVIDIA. And it shows a new model where AI labs might take equity stakes to secure that vital compute power.
Yeah, reshaping the supply chain relationship. And third,
Bitcoin goes mainstream. Well, more mainstream. Regulated Bitcoin life insurance, backed by giants like Apollo and Northwestern Mutual, showing BTC moving into long-term wealth preservation, not just quick trades.
Right. So the big picture, connecting these dots, technology isn't just speeding things up. It feels like it's fundamentally restructuring markets. How companies build AI, how they secure the power for it, and even how individuals might save for the long term using new kinds of assets.
It's a lot changing. Very fast.
Definitely keeps things interesting.
We're here to help us Snarfle, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarfle.com. Thanks for listening, and we'll catch you next time.